Welcome to ForexTV.com. Today is Tuesday, September 30th. I'm Remy Hickey for New York Forex Market Buzz. In afternoon trade, the U.S. dollar is holding on to gains across the board, but has eased back from session highs. The dollar rallied on financial sector concerns in the Eurozone, while hopes remained for a resolution to the U.S. bailout plan. The dollar hit intraday highs against the Euro, Pound, Aussie, Swissy, CAD, as well as the Yen in late New York morning trade. Now let's take a look at the latest headlines from the CEP News Desk. Markets finally shifted some of their focus on to economic data. Meanwhile, in the credit markets, the British Bankers Association reported that the overnight U.S. dollar interbank lending rate soared to 6.88%. Yesterday, there was a massive sell-off in equities after lawmakers rejected a fiscal rescue package that would have allowed the government to purchase illiquid assets from financial agents. The Dow had a record one-day decline, tumbling by 777 points at the close. Earlier on Tuesday, U.S. President George W. Bush said he is disappointed with the failed vote and that the economic damage will be painful and lasting if the government doesn't act immediately. Bush added that the legislative process is not over and that he will work with members of Congress to find a solution. And there's more evidence that Europe's banking sector is getting hit and that the credit crisis is expanding globally. Dexia received a €6.4 billion capital injection. The Belgium, France, and Luxembourg governments agreed to provide a cash injection to the Belgian-French banking group. And also over the weekend, the Benelux government came to the rescue of Fortis Bank, injecting €11.2 billion and temporarily taking control of some key assets of the company. And the UK government took control of Bradford and Bingley on Monday morning after failing to find a private buyer. And now for a look at the U.S. economic data releases from this morning. The ISM Chicago PMI came in lower at 56.7 in September from 57.9 in August, but was above the consensus estimate. The advance was led by an increase in production and some improvement in employment, though the job market continues to slow down. And the Conference Board's U.S. Consumer Confidence Index for September improved to 59.8. The figure was higher than the consensus expectations that confidence would drop to 55. The advance was led solely by the expectations component. And the S&P Case-Shiller U.S. Home Price Index fell more than expected in July. The 20-city composite index posted an annual decline of 16.3%, extending the prior month's 15.9% decline. The Case-Shiller index has fallen every month since peaking in July of '06, and the rate of the decline may be slowing. This is because the three-month annualized rate of decline was 8.56 in July compared to the 10.03% decline in June. Now we're joined by Rob Booker, Chief Market Strategist at Interbank FX. Hi, Rob. Thanks for joining me today.
Good afternoon, Remy.
Thanks for joining me. Well, we're here at the end of the third quarter as well as the month of September, and we've witnessed a seismic shift in the financial landscape and have seen the credit crisis batter the economy, not only of the U.S. but also overseas. Now, as hopes still remain for some form of resolution on the bailout plan, banks are squeezed and money markets are frozen. But the U.S. dollar has rallied despite expectations of the Fed taking action sometime soon. Now, some may liken the dollar's ability to hold up similar to price action after the 1987 Black Monday market crash. But first of all, give us your assessment of the latest developments and how you're incorporating this into your FX forecast.
Well, first of all, I try not to let any panic-driven moves significantly affect what I do. In fact, if it does anything as far as affecting the way that I trade or the way that I look at the markets, Remy, it really concerns whether or not I take a more patient approach. And these are the types of times when I've decided I really don't want to try to be a hero. I don't want to try to prove that I know more than the market. And these are great times to sit back and let some of the panic and some of the volatility subside, because these types of markets where currency pairs in particular can move so far, so fast, are exactly the types of markets where traders just need to be the most careful and make sure that not trying to, sort of like I said, be a hero or prove that they can stay in a losing position for a great deal of time. The volatility and the excitement in the markets are really not going to subside anytime soon.
Well, Rob, I think that is very good advice for Forex traders out there. And speaking of which, taking a closer look at the majors, starting with euro dollar, the euro did fall over 4 full figures today, which is the largest single-day drop in the currency since its inception in 1999. Now, volatility is key, as is risk management, as you mentioned. So what's your short-term strategy for euro dollar?
Well, first of all, my strategy is to let the euro dollar just go crazy for a day or two if that's what it wants to do. These are the types of markets. You can see it as it's happening, right? I mean, you can, before it goes 4 full figures down, we can see it moving faster, farther than it does usually. And that's why I spend a lot of time, sort of doing statistical analyses on how far a currency pair is likely to move within a given period of time. And just within the last 3 days or so, we've definitely seen that the euro, the pound, the Japanese yen, these currencies can move so far, so fast, and much farther than usual. So my present strategy right now, to be real honest, is to let this thing play out. And that means that for at least the next couple of days, let this whole thing settle down. Let the market move where it's going to move. I don't have to catch these exceptionally, incredibly huge moves because we don't see that most of the time. And so right now what I'm doing is just taking a bowl of popcorn and watching this thing play out for now, because I don't need to be a part of this exceptional or exceptionally dangerous period of time when the market is moving so far, so quickly, and much more than usual.
Well, Rob, keeping that in mind, while the euro does get hit not only against the dollar, but also against the pound and yen, I do want to take a look at euro yen as well as dollar yen. The yen is now trading near session lows against the U.S. dollar, and overnight we saw the September 16th low at 103.55 was retested and breached. So for traders of the yen out there, what would be your recommendation, not only against the U.S. currency, but also the euro?
Well, it looks like, although we don't talk about it anymore, a year ago it was really a hot topic to discuss the carry trade, where investors, global investors, would borrow yen cheaply and invest worldwide in other financial instruments that paid a significant rate of return. We haven't heard a lot about that, but the fact remains that the risk appetite for global investors is often still expressed through the movements in the dollar yen, the euro yen, and the sterling yen. And given the fact that we will probably continue to see uncertainty in the markets, uncertainty about the U.S. government's response to the credit crisis, uncertainty about the Europeans' response to the credit crisis, in particular answering your question about the euro yen, just a day ago the European Central Bank was sort of criticizing the U.S. for letting so many banks become insolvent. And we saw overnight that Europe really wasn't in a position to be criticizing or offering advice. They had problems of their own. If we continue to see financial problems and credit problems in Europe, as we have in the last 24 hours, it's very likely that we'll continue to see global investors sort of rush out of the euro, in particular against the yen as well as the dollar. So that's something to really pay attention to. Look for news coming out of Jean-Claude Trichet's mouth and the European Central Bank. Those are things that we'd want to pay attention to in order to get a better idea of where the euro in particular is headed next against the yen. With respect to the dollar, it's really up to the U.S. Congress. We're either going to see a plan or we're not going to see a plan. If we do see a bailout plan, if we do see something come together by the end of the week, it wouldn't surprise me to see the dollar improve significantly against the yen. However, I think we've already proven that there is no guarantee that a plan is going to be in place even by the end of the week.
Okay, Rob. Well, now that we've focused on the European currencies, I do want to shift our focus over to the Aussie dollar. Now that we're well below the 80 level in Aussie dollar and the trend does remain down, are you looking for traders of Aussie out there? Do you think fading rallies is a good strategy?
Well, I don't think it's the worst strategy in the world. It all comes down to how much money's in your account. And I spoke a couple summers ago with one of the global currency trader, and he was holding on to a losing position that was costing him at the time $1 billion of his portfolio. And he says, well, I'm going to hold on to this losing position because I can withstand the move. Now, most of us can't withstand even 1/100th of that move. It's never my recommendation that a trader really sort of get in the way of an oncoming train or attempt to sort of become a hero and prove that they've picked the exact spot of a reversal. So at times like this, where the Aussie dollar or even the euro dollar is really falling so sharply, these are excellent times that you either decide that you're going to risk a very small portion of your capital, or you're not going to risk anything at all with respect to trading against this developing or redeveloping trend in the Australian dollar. It's hard to imagine that that's going to cease anytime soon. I mean, it's really a resumption of the overall, resurgence of the U.S. dollar lately. You have a global economic slowdown. You have the Australian dollar that has benefited as much or more than any other currency on the planet. But a government that continues to run account deficits and will continue to see economic decline as the appetite for commodities worldwide slow down, as construction slows down. So it's hard to imagine a fundamental scenario where this currency in particular begins to strengthen unless some really significant turnarounds are seen in the near future.
Okay, Rob, I think that's very good advice for traders out there. So thank you very much for insight and analysis, and thank you very much for joining me this afternoon.
Thanks, Remy.
Thank you. This has been your New York Forex Market Buzz with Rob Booker, Chief Market Strategist at Interbank FX. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.